Good morning, Southern California, AM 1220, FM 98.1, KHTS, your hometown station, also online, Facebook Live, hometownstation.com. Welcome to the special coronavirus financial hour, if you will.
Sure.
Getting your finances in order. I'm with my co-host, David Cantrell.
Good afternoon, everybody. Hello. Thanks for being here, or thanks for listening.
Yep, absolutely. Or watching online.
Or watching online.
That's right.
Yeah.
That's right. I'm Fred Arnold. We want to talk today to start off about forbearance.
Right.
That is the hottest topic right now. What if you had to go into forbearance? So, Dave, just take us through what a forbearance is real briefly and why people are doing it and what's it for.
So, yeah, I mean, because we've been talking about forbearance in the past couple of shows, and we've been speculating on what we think is going to happen. And you know, the agencies by Fannie Mae and Freddie Mac have been kind of letting us know, but they actually came out with some guidance. And so finally kind of we actually know what the guidelines are. And this is mostly for people that want to refinance right now because rates are so low, but they maybe went into forbearance or not. So let's talk about what exactly happened.
Real quickly, what is a forbearance? Just in a nutshell, if someone goes, oh, did I do that?
Forbearance is you went to your lender or your servicing company and said, you know what, because of the coronavirus, because of the CARES Act, they said that they are allowed to take a 90-day forbearance or 3-payment forbearance. And forbearance is just that. It means that you're skipping those payments. Now, it does not mean those payments are going away, right? It's not a freebie. They are definitely a part of that loan. And the way that we've seen the forbearances are handled in one of 3 ways. Either they are paid in full on day 91.
If it's a 3-month forbearance.
Correct. I'm assuming a 3-month forbearance if it's 2 months or 1 month, but let's assume 3 months.
And you could do up to 12.
Correct. Most people we've seen out there are doing the 90 days, or that's what most lenders are talking about. So day 91, all 3 months are due right now. We've heard that. I haven't really seen that, and people aren't really doing so. They understand that if you're in forbearance, it's probably because you're not working. The next one, which is one of the most popular ones that we've seen, is they take those 3 payments and they add them to your regular payment now. So maybe you're making an extra $200 or $300 a month until you make up those 3 payments.
Until you catch it up.
Yeah, so it's a payment program, basically.
Well, if you couldn't afford it to begin with, then it's going to be tough for you to have an extra $300 a month.
Yes, exactly.
So then it cascades down into a modification.
Right, exactly. And then the last one is when they are basically taking those 3 months and they are just putting them on the back of the loan, where they're saying, okay, instead of a 30-year loan, you now have a 30-year and 3-month loan.
Now, I want to mention that real quickly because a lot of people would love that or prefer that, but a lot of banks aren't doing that.
Right, they're not.
Yeah, that's like the best case because basically you're taking the payment that was due today and not having to pay that for 28 years, 29 years, which is a freebie to carry that money.
Correct.
But instead, they're saying, let's make it as a second loan, a secretary loan, they called it. And adding that, let's say 3 months times $2,000 a month, $6,000 at the very end, collecting interest as a second loan,
right?
Or secretary loan. But if it's for 12 months, you pay $2,000 a month. I mean, you're missing $24,000. It's a lot of money to make up. So,
absolutely.
So that's what a forbearance is.
Right.
And so, what's the guidance that people got a forbearance,
right?
And they want to refinance? Let's talk through scenarios because rates continue to be soft and drop, and it's probably the most opportune time in my 29 years to refinance.
Absolutely. I couldn't agree with you more, 100%. So let's talk about somebody that went into forbearance, said, you know what, I called my lender, I called my servicing company, and I said, you know what, I want to go ahead and go into forbearance. The CARES Act said I'm allowed to do it. I want to do that. But then, they decided that they are working for an essential, they're an essential worker, so they are working the entire time, and they said, you know what, I know I can still make my payments. I'm going to go ahead and just make my payments.
But on their credit, it says they're in forbearance.
Correct.
You know that 40% of all homeowners that took the forbearance initially took that option?
Yes.
And are making the payment.
Yes.
Yes. So it's affecting their credit a little bit because it says forbearance.
Right.
They can't refinance right away technically, right? But they need to get some further documentation so they can refinance.
Right. So they need to be out of forbearance. That's really the thing. They have to call and say, listen, I want to get out of forbearance. And if you then go out of forbearance and you haven't missed any payments, then you are able to refinance. Okay, so but you have to get out of forbearance. You have to officially be out of it. So you definitely need to call your lender and say, hey, I'm done. I don't want to be in forbearance anymore. And you have to be out of the actual forbearance.
Yep, you have to step out of it because it show up on the credit, and that's where the challenges
exactly.
are. So let's say somebody missed one payment or two payments.
Okay.
Now they're coming on and they missed two payments. What do they do?
So now this is probably going to be the one that most people are in when they go into forbearance. This is basically, again, we talk about what the modification was. Are you making those payments monthly? Are you making a payment at the end of the loan? That's typically what most of it is. Once you figure that modification out, either way that you're doing, either you're adding the payments or now you need to make 3 payments in a row for us to be able to do a refinance. So you get out of forbearance, you're saying, okay, I got my modification done, I'm paying a little bit extra. That does take you out of forbearance technically, so you gotta be out of forbearance. And now we're looking at it, okay, so you go out of forbearance in May, we gotta see June, July, and August, then we can do that then we can go ahead and do that refinance.
You gotta make 3 payments, yes.
Right.
The one caveat that we're trying to interpret though in the rules that we got this week, it did say, let's say you're 2 months behind, let's say $2,000, you're down by $4,000, and you've been saving that money, so you write a check. If you write that check before the loan approves, they're saying for Fannie Mae and Freddie Mac loans, they're allowing you to refinance without making those 3 payments if you write a full check to catch up for the forbearance.
Correct.
Which is, again, really interesting because if you needed the forbearance, then you probably don't have the money.
Right.
If you didn't meet the forbearance, then you can typically write the check. You should have never taken it, but maybe there's some fear that you weren't going to have the income.
And then also there's another important point. So if you're doing a cash out refi, like we've talked about, this is a great time to do cash out refis to use that money for either other investments or paying down debt. You cannot use that money to pay off what you owed in the forbearance. So that money has to be paid separately before we can go ahead and move on with the refinance.
Or it needs to be part of a modification,
correct.
an agreement. Modification is just an agreement to pay in the future.
To how you're going to pay it back.
I know it seems complex, and it's the thing Dave and I study every day, so give us a call at American Family Funding. Happy to go over it with you and walk you through it, you know? It's important information to know, and there's more caveats we could talk about. But we're going to jump to a quick break. But when we come back, we'll give an update on what's going on with the protest in Santa Clarita. And then I want to talk about credit and getting clean credit, getting your credit score higher so you can get the best car loan, you can get the best credit card loan, and you can buy a home in these ever-changing times. You've been listening to and watching online KHTS AM 1220, FM 98.1, and Hometown Station, your host, Fred Arnold.